If you have ever felt that pit in your stomach watching your crypto portfolio just completely tank, then this one's for you. We're going to talk about the psychological traps that cost investors an absolute fortune, and more importantly, how you can sidestep them for good.
See, here's the thing that most people get wrong. In crypto, most people don't actually lose their money because of a random market crash or, just simple bad luck.
No, they lose it from emotional, rushed, and, let's just be honest with ourselves, completely avoidable decisions. Welcome back to the channel, Finance People. If you are new here, a hearty welcome from the JoshLM Finance crew. I'll be your teacher today. Today, we are breaking down the 5 biggest mistakes that just repeat every single cycle and how you can avoid them. So get your pen and pad out and let's break this down.
All right, mistake number 1, and this is the big one. This is the one that gets almost everybody at least once. Falling for the FOMO buying trap. We've all been there.
You know the scene. You're scrolling online and you see a coin just absolutely pumping. It's all over Twitter, your group chat is blowing up, everyone is screaming that this time it's different, and this thing is headed straight for the moon. So what do? You jump in and buy. And just like that, you have now become the exit liquidity for somebody who bought that same exact coin months ago when the market was boring and nobody was talking about it. The smart move, the strategic move, is to have your plan before the hype starts. You decide your entry zones when everything is quiet, not when everyone is screaming their heads off.
And listen, this isn't some abstract theory, right? We all saw this play out in real time back in 2021. People were absolutely terrified of missing the next big move for Bitcoin, so they just piled in right near the top, around $69,000.
And what happened next? Well, the market proceeded to drop over 70% in the following year. I mean, a brutal lesson in why buying the peak out of pure fear is one of the highest risk moves you can possibly make. Now, let's look at the flip side of that emotional coin, which is honestly just as destructive, the panic selling pitfall. The market drops, your portfolio is just bleeding red, all the news is doom and gloom. You're scared, you're tired of seeing the number go down, so you sell. You click that button right near the bottom, and you turn what was a temporary on-paper loss into a permanent, very real one.
I love this quote because it's so painfully true. If your entire plan just goes out the window because the market has a bad week, you don't actually have a plan. You're just reacting with your feelings. And hey, if you can relate to this, if you've ever felt that urge, do me a favor and hit that like button. We're on a mission to get to 1,000 subscribers, and honestly, every single click helps us out a ton. Thanks.
Okay, mistake number 3. And this one might ruffle a few feathers, but HODL is not a plan.
Now hold on, don't get me wrong. Holding strong assets like Bitcoin or Ethereum for the long term, that can be a fantastic strategy. But blind hodling, just holding everything forever out of pure hope, that's not a strategy. That's just emotional attachment. Remember all those coins from the 2017 bull run? Yeah, a lot of them never came back, ever.
So, you have to be an active manager of your own portfolio. You got to ask yourself some tough questions on a regular basis. First one, is this project actually still growing? Are people building on it? Are new users showing up?
Second question, is the story still there? Is the narrative still strong? Is this project still relevant in today's market, or has the world, kind of moved on to the next shiny object?
And finally, the most honest, brutal question you can ask yourself, forgetting what you paid for it. Would you buy this asset today, at its current price, if you were starting from scratch? If the answer to that is no, you might be holding a souvenir, not an investment.
All right, mistake number 4. This one's for all my chart wizards out there, relying only on charts and completely ignoring what's happening in the real world. A lot of people, they just stare at charts all day. They see the trend lines, the indicators, all these beautiful patterns. But here's the thing, charts only tell you what has already happened with the price. Fundamentals, the real-world events, that's what tells you why it's happening.
And these fundamentals, man, they can blow up any perfect-looking chart you draw. We're talking about the big stuff, right? Major economic news like inflation reports, what the Fed is doing with interest rates, new government regulations, big news about a Bitcoin ETF. Any of these things can send the market flying or crashing, no matter what your lines on a screen said. You gotta pay attention to both.
Okay, the 5th and final mistake for today, getting played by whales. Whales are the big players, the institutions, the large funds, and they move the market in ways that are specifically designed to trap smaller investors like us. They will, allegedly, create fake breakouts to make you FOMO in, or they'll cause these sudden, violent dumps to make you panic sell. You have to understand that these fast moves aren't an opportunity for you. They are designed to trigger your emotions so that the whales can take profits from your reaction. Chasing a massive green candle is usually just running straight into their trap.
So we've gone through the 5 biggest mistakes, the things that trip up most investors, cycle after cycle. Okay, so that's all the bad news. How do we flip the script? How does the smart, patient money actually win in this market for the long term?
Well, it comes down to a pretty simple survival kit. First off, they dollar cost average. They buy consistently over time, whether the market is up or down, doesn't matter. Second, and this is huge, they take profits. They don't try to time the exact top. They sell portions on the way up into strength. Third, they always keep some powder dry, some cash or stable coins on the sideline ready for big opportunities. And finally, the golden rule. They only invest money they are fully prepared to lose.
Look, at the end of the day, you don't need to be some genius who predicts every single pump and dump. You just need to avoid the big, catastrophic mistakes that wipe people out. Because surviving the bear markets is what ensures you're still in the game to enjoy the bull markets. That's the real secret.
All right, and of course, the quick disclaimer, this is all for education and entertainment, not financial advice. Always, always do your own research. Thanks for sticking with me till the end. It shows how important financial literacy is to you. Clearly, you got value from this, so do me a favor and share it with someone like you, and I'll see you in the next video. Take care.